Hey traders, Akil Stokes here, and welcome to another episode of the Trading Blog. If this is your first time joining me, this is a series of videos that I've been doing on almost a daily basis, just giving you a chance to look in on my journey as a professional trader. Now, sometimes I talk about lessons that came up during my live trading room. Sometimes we even talk about trading opportunities. Today, we're going to keep it really simple, and I just want to update you on how my trading has been. And I want to start off by sharing with you an article that I posted on my Facebook page the other day. Let's go over here and take a look at it. If we scroll down, hopefully you saw this video right here. If we scroll down, it was a video I posted this, an article I posted this weekend. This is a pretty decent one too. Here's what the Fed used to gauge interest rate hike. Where are we at? Another one. Contacted by a prop firm this morning, invited for Monday. Here it goes. Pretty cool first paragraph in this article. The article is called "Classic Models Are Failing, FX Hedge Funds Desperate for Return." And it started off by saying it was supposed to be it was supposed to be the year of a great comeback for currency traders. After all, didn't Donald Trump reignite the animal spirits of financial markets by promising a slew of growth-boosting health reforms? It turns out currency managers feel more powerless than emboldened. Most of the strategies traders use to generate profit, momentum, carry trades, and fair value have either lost money or nearly erased their gains this year. According to Deutsche Bank AG models, buying the dollar, which became a popular momentum and carry style trade based on the prospect of fiscal stimulus and higher interest rates, has flopped in the face of scant U.S. policy details and the possibility that Europe and Japan may soon follow the U.S. and exit quantitative easing. Nothing is really working all that well, which is why it's a tough year for currency trading. And this is something that I've been mentioning all year. This has been, every year is difficult to be a currency trader. But this year in particular, there have been many times where it seems like nothing is working the way we expect it to. And it's been a very difficult year for trading. And one of the things that has gotten me on track, especially since the beginning of the year, if you guys remember, I started January, the first, I think, 2 or 3 months of January, straight nosedive. I've kind of steadied myself and gotten back on track. But one of the things that has helped me lately has just been the completion of some very big trades. In the last few weeks, we had 2 big trades complete on the Aussie Canada. We saw some 2 target winners on dollar yen and Aussie dollar this week, and a big trade on the New Zealand dollar. Technically, it didn't hit targets, but we were still stopped out on trail stops for over 100 pips. And those big trades have helped to offset the amount of losers that I'm taking. I have taken more than my fair share of losses this year. Historically, I tend to be about a 55% trader, meaning I win only just a little bit more than I lose. And I know win percentage doesn't matter. We had a great conversation about that this morning in the live room. But your whole expectancy is also based on what your average win percentage is. And this year, I've been below 40s. I'm still below 40s for the entire year. So the only thing that has been keeping me afloat has been the ability for my winners, my bigger winners, to make up for those small losses. So think about it this way. Instead of taking a lot of big wins and having a few losses, I've been having a few wins, a lot of losses, right? A lot of smaller losses, but the bigger wins are making up for it. And it's not a bad approach. If you go back to Richard Dennis and the Turtle Traders, or really any type of trend continuation trader, that's typically what they do. They lose, and they hop on the big trend and they win, and it makes up for it. The problem is with most traders out there, especially most retail traders, they don't have the discipline to do so. They're going to lose and lose and lose and lose. And by the time they catch that one big trade that's supposed to be the winner that will make up for the previous 5 losses, what do? They sabotage themselves, right? They take stops, or they take targets off early and only capture a fraction of the profit that they were supposed to capture. And now when those wins aren't making up for those losses and you're taking more losses than wins, right, you're slowly draining your account. So discipline is key, and that's I got a great email from a client the other day. Let me see if I can bring this up for you. Is one of our transformation members who told me this. Where is it at, Dennis? There we go. He said, Akil, and this came off of yesterday's video where I kind of talked about the trader that was making mistakes. He said, admission is the best way not to repeat a mistake. After making a good trade, following my rules, right? That we all know that's what classifies a good trade. After making a good trade a few weeks ago, I made a bad trade today. I moved stops from a Gartley formation because I thought the Gartley stops were too tight. I moved them to the upper structure limit and thought they would hold, but then there was a big move, so I moved stops again, and well, you can guess what happened next. And this trader is doing the exact opposite of what we need to be doing. We need to, especially in times like this, we need to work on conserving capital. That means actively managing your trade, right? Actively managing how much risk you have on the table when the trade is going in your direction. But most traders, unfortunately, are doing the opposite. They're doing what this trader did. They're, instead of moving stops to lock in profit, they're moving stops back in hopes of a turnaround. And they just end up losing even more money in the long run. And they end up skewing their risk reward from what once was a positive risk reward to what is now a negative risk reward. So that's something that we're going to be talking a lot with traders. I know we have our private strategy labs on Mondays. We've done a lot of conversations about that in the past. I'm sure we'll do some more in the future. But if you guys feel that way, if you feel like you're one of those traders that you're doing the right thing, but just mentally you're losing it, my advice would be to join some type of community. If you have the chance, spend some time in our live trading rooms. We have a London live room. We have a New York live room. There's about 50 traders in each of them. So you get to spend time with other traders, other like-minded individuals. And it's good to see that, hey, you are not alone. Other traders are struggling. Other traders are also there to loan you advice and, kind of even tap you on the back and say, hey, good job, or hey, you made a mistake. It's okay. You'll get them next time. So there's a link underneath this video. You can spend a free week in there. Again, you can spend a free week in both, right? If you feel like waking up early, catch the London room, then join me in the New York room and, see if trading with a community helps your trading, helps you get back on track. And of course, if you don't have the time to spend in a live room, you can always check out our syndicate program. It's $1 for the first 30 days. It's not the same. You don't get as much interaction, but still it's a place that you can be to kind of get the support that you may need to get your trading in the right direction. So that's it for today's trading blog, guys. I will see you tomorrow. And until then, plan your trade your plan. Take care. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website or also take a look and you'll see more videos available for you. Have a good one.